In this video, I'll respond to some of your comments. Before I dive in, if you're new to investing or want to get better at investing, you're in the right place. Here at Tykr, we're all about clear, confident investing. All right, let's dive in. So the first comment is from You Matter in This Life. The comment is, I hope Palantir will go back down to 30. That's the correct valuation of the company. Many people don't understand that there could be a possible stock market reset, which means most stocks will get evaluated the right way. All right, so 2 points there I'll touch on. You're right, the market could go down. Trump has talked about the tariff negotiations with China, and we could see a repeat of what happened between, it was really September of 2017 through March of 2018. It was like a 6-month window where the last negotiations took place, and the market went down about 12 to 15%, and tech stocks went down a lot more. The stocks that got hit the hardest were semiconductor stocks, but definitely Palantir could take a hit and go down. But with investors, if you join Tykr, you know that's a stockpiling opportunity, a time to buy more. The other point is the valuation of the company. So with Tykr, if you guys don't already know, if you go to tykr.com and then education and then calculations, our calculations are all open source, and about 70% of the math is from Phil Town. If you don't know him, you should Google him. He's got a few really good books. Rule 1, there's also Payback Time. And then he wrote another book called Invested with his daughter, Danielle. So check those out. You'll see how we evaluate businesses. And again, it's all open source. And just to show you one thing here to really prove, does Tykr actually work? We'll check this out. We've got a feature called backtesting. And if you can beat the market by like 5-10% over 5 years, that's considered really good. Check this out. So our ratings here on sale stocks, 4M70, that's powered by OpenAI, and then large cap, S&P, as we speak, is up about 91% over 5 years. Look at this. This fund up 213%. It's pretty much doubling. Let me show you another one. This is watch stocks. Not as strong as on sale stocks, but look at this. They're up 184%. And then for fun, I created a tech ETF in about 30 seconds. Check this out. You can see here up 255%. So it's powerful. It's very powerful. Our next comment is from Steve0905. Could you do an analysis of Rain Metal? Sure, let's check it out. Rain Metal. Fortunately, Tykr does a lot of heavy lifting for us. We're looking at somewhere between 50 and 70 data points per stock, and it's all automated by the software. If you don't know this, I used Tykr for like 4 years in an Excel sheet. It was very time consuming. It took me like 10 minutes to analyze one stock. I'd have to copy paste data from like Yahoo Finance or Market Watch over to this Excel sheet. Long story short, we just look at the fundamentals over 4 or 5 years. So in this case with Rain Metal, let's walk through what we call the 7. It's like the 7 key steps to determine if a stock is a good or bad investment. Context on this business, if you're ever curious, go to the details tab. You can read a quick synopsis. In this company, they have 5 segments. It's vehicle systems, weapons and ammunition, electronic solutions, sensors and actuators, and materials and trade. And then what I like to do is go to their website. I like to go to either a product or services page. In this case, I go to systems and products, and I can kind of get a good idea of how does this business make money, mobility, industry. It looks like hydrogen, thermal management, some pretty technical stuff, but some stuff that's more recognizable to most people. We've got air, land, and sea all within the military. So military applications with Rain Metal. And let's go ahead and walk through the 7. So the first thing I do is I look at that summary. In this case, it's a watch we want to see on sale. So out of 7, we're 0 for 1. Move on to the score. We have a 72 out of 100. The higher the score, the safer the investment. So if it's over 50, we're going to go 1 for 2 in this case. Then over to the margin of safety. In this case, you want to be over 50. The higher the margin of safety, the safer the investment. So we don't get a check here. We are 1 for 3. In the middle, the 4M score is 77. If you can get over 80, that's really good. So you know what? I'm going to round it up. I'm going to go 2 for 4. Then let's scroll down. We like to see stocks that consistently beat the market, not 1 year, but over 5 years. And for context, kind of like what I talked about with that back testing feature, which is showing S&P like around 80 or 90%. I like to look at stocks that are like over 80%. In this case, this stock here, over 500% over 5 years. That's outstanding. So in this case, I'm going to go 3 for 5. Let's keep going. Over to the financials tab. The number one most important line on the financial statements is EPS. That's earnings per share, which is essentially net income divided by outstanding shares. The second most important line is revenue. When I worked for large corporations and public companies for a little over a decade, when you get into the boardrooms, there's a lot of things that they don't talk about. They don't talk about PDE ratio, especially. They don't talk about market cap. They don't talk about all this noise. What they do talk about, the two most important lines, are profits and revenue. That's why, as an investor, we need to pay attention to the same thing. All right, so looking at EPS, we want to see 3 consecutive quarters of increase. In this case, we do not. We are seeing this stock, as you can see, is pretty much break even. We had 2, but then it fell off. So we are going 3 for 6. Let's keep going. Earnings calendar. In this case, we do not have estimate data, so I'm just going to say this stock is 3 for 6. We're going to discount the 7. But overall, what I would do in this case, I would not buy Rain Metal, but I would probably add it to the watch list. And things could get really exciting with this stock if you pay attention to that earnings per share. We want to see the stock, see this $1.43. I want to see another quarter where it's like over $1.50. Then it's going to get exciting. All right, next up, this is from Wayne Hartler Ode 8936 says, hey, at no point do you compare the revenue to their market cap. Insanely misleading. Revenue insanely low for what they are worth. Just saying, zoom out a bit to bigger context. So I see a ratio is mentioned here, revenue to market cap. Now, with my experience in investing, and I have a lot of friends that work for large financial institutions, revenue to market cap is not a ratio that's used. If you want to use it, you can certainly use it. But the ratios that are most important, I'll show you right now. If you go into Tykr, you can click on any stock. For example, let's go to NVIDIA, since everybody's talking about NVIDIA. I mentioned the 2 most important lines are EPS first, then revenue. If you're curious, the other lines you want to pay attention to, income statement, you see revenue, income, EPS, cash flows, free cash flow, and then balance sheet, you want to watch the assets, liabilities, debts, and equity. Those are the main 8 lines that matter most. After that, you can turn to ratios. Go to the ratios tab. The most important ratios are right here. Return on invested capital. You have return on assets and return on equity. You can see here, there's certain criteria that needs to be met to make these green. If they're not green, then of course they're red. With the ratios, everything's green, which is outstanding. Now, I mentioned those 3 lines, ROIC, ROA, and ROE. Those are most important. Also on this list, you can see here P/E and P/B. These are gray, and they'll always be gray. The reason is, and we have an article that talks about this, and even Investopedia does, so check this out. Beware false signals from P/E ratio. If a P/E ratio is high or low, it can be good or bad. So how do you make a decision? Same thing with P/B ratio, price to book ratio. P/E is just price to earnings. So a lot of people that really are successful investing don't use P/E or P/B. I do see a lot of people talking about it on social media. It's like, 1975 called them once their analysis strategy back. It's not really used anymore. It's profits. It's profits through and through, and that's what matters most. Now, just to touch on one thing with ROIC, that's the one ratio that's used in those boardrooms. When you work your way up in a corporation and you're given a budget, like when I was working in large corporations, I was given a budget not to pay me, but really to manage and deploy somewhere between 1 and 2 million on average. Largest project I ever did was over 10 million. That's a lot of money to manage. And if you screw that up, you run into what's called an RGE, a resume generating event. You are now walked out the door and you'll polish your LinkedIn. Essentially, you're given that capital and you have to deploy it into marketing, sales, operations, and you had better generate a lot more revenue and profit or save the company a lot of money. And if you can't generate an ROIC, you're going to be walking out the door. That RGE is going to be realized. So just keep that in mind. That's the ratio that matters most. All right, let's keep going. This one's from the Music 6808. It says on sale with a margin of safety. It's trading at nearly 150 times next year's earnings and 55 times revenues, LOL, to make an average return of 10% per year from this price with an assumed P to E. What did we just say about P to E? Of 40, which is a software sector median. They have to grow net income by 35%. So I'm going to stop there. There's a lot of metrics here that are being used. Again, you can use them, but I probably look at your investing history to see are you beating the market? If so, great. If not, maybe reconsider your analysis strategy. Again, P to E, Investopedia, I love that platform. There's a lot of smart people that work there, and they even talk about it can be misleading. So I tend to follow Warren Buffett, the late Charlie Munger, and of course Phil Town. Follow the profits. Are the profits increasing or decreasing? Let me show you something here with NVIDIA. Some people say, hey, it could be overpriced. Some people say, not a lot of people say, but you ever want to see the truth in about 3 seconds, do this. Go to financials, then go to EPS, and this is what you want to see. When you're in that boardroom and you're in a senior level position, or if you're the CEO and you're presenting to the board, this is the chart you want to show. If you show a chart where the EPS is declining, it's like a firing squad. You're going to be riddled with questions. Why is this not working? Why is this happening? Why didn't you do this? Walk me through. Whenever you hear a sentence that starts with walk me through why with that tone, that's a bad place to be. Like, you want to be out of that boardroom as soon as possible. This right here, you're not going to get that question. You're going to get the questions that are like, how do we continue doing this? How do we keep this up? How do we maintain this growth? Those are the questions you want, but you never want to be, you're walking into that room and you see the profits decreasing. Bad place to be. All right, let's keep moving. Next up is from Blazing Shackles. This is more comments than you ever received on your channel. You're welcome. No joke. I really appreciate the amount of comments. This is specific to the Palantir video. So that's great. And then Wayne comes in and says, Meme Stock Mania CEO loves taking your money. And I appreciate comments like that. So I want to be transparent with how Tykr makes money. When I sought out to create Tykr, I was not creating a YouTube channel to make money. The YouTube channel is really just a marketing channel to invite people to Tykr. We also do SEO. We have an affiliate program. Referrals from friends are big. But we use YouTube to introduce people. And our model is very similar to like Netflix. We call that a low touch SaaS. Nobody has ever sold on Netflix. Like, nobody ever got a call or got an email that says, hey, you need to use. Like, our model is you can join for free for 14 days. And if you like it, awesome. If not, like, no big deal. Like, the software and experience should sell itself. So we're not here to take anybody's money. And if we were, I wouldn't be in business anyway. That's not my motto. All right, I'll keep going. All right, next up is from Secret YouTuber 2736. Hi, when to exit a stock once we buy on sales? Does Tykr suggest a stop loss or target? Kindly reply. You bet, happy to help. So I'll talk about when to buy, when to sell, really simple process. When to buy is when a stock is, let's go to NVIDIA here, is when a stock is on sale and that 4M score is over 80. 2 steps. When it's time to sell is when that on sale flips to watch or overpriced. So that's step 1. Step 2 is that 4M score is 59 or lower. The 4M looks at the whole business, not just the financials. It looks at the business model, how many revenue streams does it have, the competition, and of course the track record of leadership. Doing a 4M analysis manually could take you hours, if not days. We reduce it down to seconds. Thank you, OpenAI. And we did a lot of rigorous testing on this before taking it live to you guys. So we know you get to 59 or lower, you get a bad situation there. So that's step 2. Step 3 is when you're profitable. We follow Warren Buffett's rule. Rule 1, don't lose money. And rule 2, don't forget rule 1. So in my case, I've trained a habit. I never sell for a loss. I only sell for a profit because the market is moving up and down like waves in the ocean. In many cases, you're going to buy a strong stock. It may go down a little bit below your cost basis, below your average buy price. Just wait and let the market lift it back up. And that's when you sell for a profit. So if you join Tykr and you add stocks to your watch list, I'll show you mine real quick. You go to watch list. Here's my main watch list. when any of these stocks on your watch list change with especially that summary score or MOS, you get notified. So I highly recommend you add stocks there. This is my favorite feature in Tykr, so I can go do other things. I don't have to set up my computer. You're gonna get those email notifications, which is brilliant. So that's when you'd sell. In many cases, like Motley Fool teaches us, I love those guys. They're great. They're all about, you wanna be a net buyer, as they say. You want to be buying significantly more than you're selling. So in many cases, like in my case, I'm going to buy a great stock. I'm going to buy more, buy more, and buy more. I only sell when those 3 criteria are met. Again, flips from on sale to watch or overpriced, 59 or lower on that 4M, and you're profitable. All right, that's it for comments. I love hearing from you guys. Please leave more and I'll do my best to create more videos like this. If you like this video, hit that like button. If you want to see more videos like it, please hit that subscribe button. And of course, if you want to buy and sell stocks on your own with confidence, you can join Tykr for free. All right, we'll see you in the next video. Bye for now.